Welcome to Earnings Recap. Today we're covering Tesla's first quarter 2025 earnings report and call. If you enjoy this content, please like the video and subscribe.
All right, so today we're really going to unpack Tesla's Q1 results. Try and put it in plain English, figure out what it all actually means,
Exactly. We're looking at their current health, where they might be headed. We've gone through the Q1 2025 Q&A webcast.
Yeah, that included the opening remarks from Elon Musk and Vaibhav Taneja, plus the Q&A itself.
Right, and we also looked at their Q1 2025 update document, the shareholder deck. The goal here is really just to boil it down, get to the important stuff.
Yeah, cut through the noise, understand the financials, the key developments, the outlook. So where should we start? Maybe the overall financials. Revenue looked a bit shaky.
It did, $19.3 billion. That's down 9% compared to last year.
9%, okay. So what was behind that drop?
Well, a few things. Fewer vehicle deliveries, for one, and a big reason for that was they were upgrading all 4 global factories for the new Model Y.
Ah, right. So that meant downtime, lost production.
Several weeks of lost production, yeah. Plus, the average selling price, the ASP, went down, even if you ignore currency effects.
And those currency effects, the FX impact, they weren't helpful either.
No, that was another negative $0.3 billion. So lower deliveries, lower prices, and FX headwinds. That's a tough combination for revenue.
Definitely concerning. But wasn't there some growth elsewhere to sort of offset that?
There was, yeah. The energy generation and storage side grew. Services and other revenue was up too, and they got more from regulatory credits this quarter.
Okay, so those credits helped cushion the blow a bit. But still, the drop in car revenue was the main story.
Pretty much. So revenue down. Let's talk profit, operating income, because that tells you about the core business health.
Oof. Yeah, that took a much bigger hit. Down 66% year over year. Just $0.4 billion.
66%. Wow. What does that do to the margin?
Crushes it. Operating margin was only 2.1%. Compare that to 5.5% same time last year. It's a huge drop.
Okay, so why such a steep fall? Same reasons as revenue, plus more.
Pretty much the same, yeah, but amplified. Lower ASP, fewer deliveries. Those hurt profit directly. But also, their operating expenses went up.
Up? Where were they spending more?
Mostly on AI research and, general R&D. So they're investing heavily in future stuff.
Right, investing in AI, autonomy, maybe Optimus, things that could pay off big later, but cost money now.
Exactly. It's a trade-off. Lower profits today for potential bigger gains tomorrow, but it definitely hits the current bottom line.
Were there any positives for operating income?
A few small things helped. Gross profit from energy storage was actually up, which is good to see. The costs for ramping up the Cybertruck were lower this year compared to Q1 last year.
Ah, okay. So the Cybertruck ramp is becoming less of a drag.
Seems like it. And those regulatory credits we mentioned, they help profit too, not just revenue.
Okay, so that's operating income. What about the final number, the net income, the actual profit after everything? GAAP numbers first.
All right, the official GAAP net income for common stockholders was $409 million. That's down a massive 71% from last year.
71% down. And earnings per share, EPS.
Same story, down 71% to 12 cents per share, GAAP diluted.
Ouch. Did they report non-GAAP numbers too? Sometimes those look a bit better.
They did. Non-GAAP net income was $934 million, and non-GAAP EPS was 27 cents. But even those adjusted figures were down a lot, 39% and 40% respectively.
So whichever way you slice it, a really tough quarter for profitability.
Absolutely. A clear weakness in this report.
Okay, but what about their cash position? Sometimes a company can have lower profits but still have plenty of cash. How do they look there?
That's actually a brighter spot. Their cash and investments actually increased by $0.4 billion compared to the last quarter.
Increased? How?
They ended the quarter with $37 billion in cash and investments, and the increase came mainly because they generated positive free cash flow, about $0.7 billion.
So they're still bringing in more cash than they're spending on operations and investments. That's definitely a strength.
Yeah, it shows resilience. Even with lower profits, the cash engine is still running.
Good to know. Okay, let's pivot to the core product, the cars. Production and delivery numbers, how did those look?
Both down, as you'd expect given the revenue figures and the factory upgrades. Total production was 362,615 vehicles. That's down 16% year over year.
16% down on production. How did that break down between models?
Model 3 and Y production, the main volume, was also down 16% to about 345,000. And the other models, S and X, were down 18% to around 17,000.
Okay. And deliveries, the cars actually handed over.
Similar story. Total deliveries were 336,681. That's down 13% year over year.
13% down. And the model split.
Model 3Y down 12% to about 324,000. And the SX deliveries took a bigger hit, down 24% to just under 13,000.
So yeah, significant drops across the board for production and deliveries. That's the core weakness driving the financial results this quarter.
Definitely. But as you mentioned, Tesla said this was kind of expected, right? Because of those Model Y factory upgrades.
Yeah, they were pretty clear about that. Shutting down lines in all 4 big factories for several weeks to retool for the refreshed Model Y, that inevitably hits your numbers hard.
But didn't they mention something positive about the ramp up after the upgrades in Shanghai?
They did. Apparently, the Shanghai Model Y factory got back up to speed incredibly quickly after the changeover. Just 6 weeks. They said it was their fastest ramp ever.
Okay, so that suggests maybe their manufacturing muscles are getting stronger. They can handle these big changes more efficiently now.
It seems like it. And another interesting point, even with the lower production during the switch, they said the inventory of the old Model Y sold out in the US, China, and some other places.
Oh, really? So demand for the existing model was still strong enough to clear out inventory despite the production dip?
Yeah, it suggests that underlying demand is still pretty healthy, which is definitely a positive sign of strength.
Good point. Okay, let's shift gears. What about the energy business? You said that was a bright spot.
It really was. Energy storage deployments, looking at the last 12 months, they just keep climbing.
And in Q1 specifically.
10.4 gigawatt hours deployed in Q1. That's, wait for it, 154% higher than Q1 last year. Wow, 154% growth. That's massive. What's driving that? Powerwalls. Megapacks.
Both, it seems. They hit another record for Powerwall deployments, over 1 GWh for the first time in a quarter.
A gigawatt hour of Powerwalls? That's a lot of home batteries.
It is. And interestingly, they said they're still supply constrained on Powerwalls. They could sell more if they could make more.
Supply constrained. Okay, so huge demand there. That's a good problem to have, I guess, but still a bottleneck.
Exactly. And even though total storage deployments were slightly down compared to Q4 last year, the profitability of the energy storage business hit a new record high in Q1.
Highest gross profit ever for energy storage. That's significant. Shows it's becoming a really valuable part of the business.
Absolutely. And they talk about how crucial this storage is becoming for grid stability, especially with AI data centers needing tons of power and just general grid modernization.
Right. Batteries balancing out renewables and peak demand. What about the big batteries, the megapacks? Any news there?
Yeah, the mega factory in Shanghai pumped out over 100 megapacks in Q1, and those are apparently already heading to customers.
So we should see those deployments show up in the numbers soon.
Exactly. And that Shanghai factory, it's got 20 kWh of annual capacity now, with plans to potentially double it to 40 kWh. So big growth potential there, too. Energy is looking like a real strength.
Okay, good stuff on energy. Now, let's look forward. Strategic initiatives, future plans. Autonomy is always top of mind with Tesla. Robotaxi, FSD, what's the latest?
Still sounds like it's full steam ahead. The robotaxi pilot in Austin, using Model Ys, is apparently still on track for June.
June, that's really soon. How big will that pilot be?
Starting small, they said. Maybe just 10 or 20 cars initially, but the plan is to scale it up quickly after that.
And Elon Musk's predictions? Still talking about millions of fully autonomous Teslas soon.
Yeah. The goal mentioned was potentially millions operating fully autonomously in the second half of 2026. Still a very, very ambitious timeline.
Very ambitious indeed. What about FSD for regular car owners? The unsupervised version.
They expect that to be available unsupervised in several U.S. cities before the end of this year, 2025.
Before year end. That would be a huge step beyond the current supervised beta.
A massive step. And they really emphasize their AI-driven approach. They think their generalized AI solution is key to rolling this out fast, even in new places.
Like China, where they just launched FSD supervised.
Exactly. They said the reception in China was positive, even though they didn't have much local training data. That, to them, proves the core AI is adaptable.
But the big hurdle for robotaxis has to be safety validation, right? Handling all the weird edge cases.
Totally. They talked about using sophisticated simulations, including AI-generated video scenarios, to test for those long-tail safety events. That's the critical path.
And they drew a contrast with Waymo again.
Yeah, basically saying Tesla's advantage is lower vehicle costs because of mass production, and their pure vision system, using cameras, is more scalable and cheaper than systems relying heavily on LiDAR.
Okay, sticking with futuristic tech. Optimus, the humanoid robot. Any progress updates?
Still very much in development, but they're talking about producing thousands of Optimus units by the end of 2025.
Thousands by end of next year. That sounds fast.
It does. Most of that production would be weighted towards the end of the year, they said. The long-term goal is even wilder, scaling to millions of units per year within 5 years, maybe hitting 1 million units annually by 2029 or 2030.
Wow. That's transformative, if they can pull it off. Any roadblocks mentioned?
They did mention some supply chain challenges, specifically getting magnets potentially from China. They're working on it. But yeah, Optimus is still a big bet with lots of unknowns.
Right. Let's come back down to earth a bit. More affordable cars. That's been talked about for ages. What's the plan now?
Still on track, apparently. Start a production plan for the first half of 2025. First half of next year. And what kind of cars will these be? New platform. Kind of mix. They said they'll use aspects of the next-gen platform, but also leverage their current platforms. And importantly, they'll build them on existing production lines initially.
So not building whole new factories for them right away, using current capacity.
Exactly. Focus seems to be on capital efficiency. Get these cheaper cars out using the factories they already have.
What's the main selling point for these cheaper models?
Low cost of ownership. They specifically mentioned the monthly payment being key, but they did warn the production ramp might be a bit slower than they'd hoped, given, economic uncertainty.
So the strategy is max out current capacity first, aiming for maybe close to 3 million cars a year before building new lines.
That seems to be the plan. They think this approach alone could give them over 60% production growth compared to 2024.
Interesting. What about the purpose-built robotaxi, the Cybercab? Is that still happening alongside the Model Y robotaxis?
Yes, that's still a separate project. The one using the revolutionary unboxed manufacturing process.
Right, the unboxed thing. Where is that at?
Still aiming for volume production starting in 2026. They're doing B-sample validation now, with first big prototype builds happening end of this quarter, Q2 2025. Equipment installation at Giga Texas is apparently on schedule.
Can you remind us what's so radical about unboxed manufacturing?
It completely changes how a car is assembled. Instead of one long line, you build large subassemblies in parallel, like modules, and then bring them together right at the end.
More parallel processing, less linear.
Exactly. The long-term dream is insane speed, like a car rolling off the line every 5 seconds or less. That's key for making robotaxis super cheap to build.
Okay, let's talk about broader challenges. Tariffs, supply chains. Big issues for everyone right now. How's Tesla managing?
They definitely acknowledge the uncertainty. Shifting trade policies are making things tricky for global supply chains and costs. It's a headwind.
But they've been working on regionalizing things for a while, haven't they? Factories in US, Germany, China.
Yeah, and they highlighted that. High local content, like 85% USMCA compliance in North America, over 95% local content in Shanghai. Berlin is also getting more regionalized, though maybe not batteries yet.
So that helps buffer them against some global issues.
It definitely gives them an edge, yeah.
Yeah.
But they're not immune. Tariffs still bite, especially for lower volume cars or parts they still have to import.
Like what specifically?
The big one they mentioned is LFP battery cells. A lot of those still come from China, and that impacts their energy business in some cars.
Are they trying to fix that LFP dependency?
They are. They're actively working on setting up LFP cell manufacturing here in the U.S. and generally diversifying suppliers for everything, trying to source key things from outside China too.
And tariffs don't just affect parts, right? What about factory equipment?
Good point. That's another hit. A lot of the specialized machinery needed to build cars or batteries often comes from overseas, especially China. Tariffs make those big capital investments more expensive.
But Tesla's vertical integration must help here, surely. Making their own stuff.
It's a huge advantage. They stress they're the most vertically integrated car company. They're even building their own lithium refining and cathode plants in the U.S., set to start producing next year, 2025.
Controlling more steps means more resilience.
That's the idea. They're aiming to multi-source every single component for their own battery cells from at least 2 countries, spreading the risk.
Okay, shifting focus slightly. Demand and brand perception. How is Tesla viewed right now, according to them?
Well, despite, economic pressures and maybe some negative press, they pointed out Tesla was still the best-selling car overall in California in Q1. Not just EV, but any car.
Best-selling car in California, that's still a strong signal.
Yeah, and they also had a record number of test drives globally in Q1. So interest seems high.
What's their strategy to maintain demand?
Pretty simple. according to them. Just build the best product at a competitive price. They think that's the winning formula long term.
Did they mention any negative factors affecting demand or perception?
They did, actually. They noted some impact in Q1 from vandalism and what they called unwanted hostility towards the brand in certain markets. So that's something they're apparently dealing with.
Interesting. Okay, last big topic. Global expansion. Any news on new markets or progress in existing ones?
India is still tough. High tariffs, like 70% plus another 30% luxury tax, make the cars way too expensive there right now.
So India is still a maybe sometime in the future.
Seems like it. They see the potential, huge middle class, but the timing isn't right yet because of the cost.
Anywhere else they're expanding soon?
Yes, Saudi Arabia. They plan to start deliveries of Model 3, Model Y, and even the Cybertruck there later this year.
Cybertruck in Saudi Arabia. That'll be the first market outside North America for it.
Correct. And they're also still working towards launching FSD supervised in Europe this year.
Okay, lots going on globally. So let's try and wrap this up. Key takeaways from Q1 2025 for Tesla.
Well, clearly a transitional quarter, right? The Model Y factory upgrades hit production, deliveries, revenue, and profit pretty hard. That was kind of the dominant story financially.
Yeah, profits took a big dive. External factors like tariffs didn't help either, but the cash position held up okay.
Right. And while the car side was down temporarily due to the planned upgrades, the energy storage business just keeps powering ahead. Record profits there, huge growth. That diversification looks increasingly important.
Definitely a key strength. And looking forward, it's all about the big bets, isn't it?
Seems like it. Autonomy, FSD, robotaxi, cybercab, robotics with Optimus, bringing out those more affordable cars, and continuing to scale energy. That's where the focus is.
And underlying all that is the tech development, FSD progress, the manufacturing innovations like unboxed, battery tech, vertical integration.
Exactly. Those core technology advancements are what could really drive their future and maybe shake up entire industries. Investors will be watching execution on all these fronts super closely.
Which leads us to a final thought for you, the listener. Think about this convergence. Tesla is pushing AI, robotics, sustainable energy, all intertwined.
Yeah. How do you see that combination potentially reshaping things like transportation, how we make stuff, how we use energy over the next, say, 5 or 10 years? What are the biggest challenges you see for Tesla in making that vision real? And honestly, what are the possibilities that get you most excited?